fresh reports, Peter, that China and Hong Kong will give each other mutual access to their markets. Now, if this is true, it is big news, but we've heard this song before.
We have, and I have to say the reports sound a bit premature. The Hong Kong Exchange has said that even though there are talks going on with Shanghai, that nothing really happened yet. But our view really is that this is not so much a big bang as more of a sort of slow slam. Really, there's been a lot of discussion for many years about the possibility of allowing Chinese investors to buy shares in Hong Kong and also allowing investors in Hong Kong to buy shares on the mainland. If that were to happen, that would be a big deal. But there are many reasons why it hasn't happened yet. And the main reason is that if you allowed Chinese investors to take their money out of Hong Kong by buying shares, you would essentially be opening up China's capital account. And that is something that China has said it wants to do in the long term, but is not something that it's about to do anytime soon. So the feeling is that even if something were to happen on this front, and it does sound like there are some discussions going on and there will be some kind of agreement, it's going to be gradual rather than all happen at one go.
Understandably that it would be gradual, but for Hong Kong, it really needs this big bang for the markets. I mean, the Hong Kong volumes are actually drying up. We saw Alibaba move over to New York. Hong Kong exchanges need something.
Yeah, I think that's right. I mean, definitely there is a lot of hope, and we saw the Hong Kong Stock Exchange, its share price rise over 5% the other day on hopes that they might be about to sign some kind of agreement. And definitely, I think if that were to happen, if there were to be some sort of mutual market access, that would be a big deal, both for Hong Kong and for the mainland. Clearly, if Chinese investors could get access to stocks in Hong Kong, that would increase the volumes, and it would also help to reinforce Hong Kong's position as a capital market. Likewise, if investors based in Hong Kong could access the Chinese capital markets more directly than the way they do at the moment through this system of quotas and so forth, that would also be a big help for Hong Kong. But once again, I think they've talked about this in the past and backed away from it. We have this complicated system of quotas for investors going into China and coming out of China, and I think it's hard to see for the broader macroeconomic purposes that I described earlier. It's hard to see anything really big changing on that front anytime soon.
Mutual market access between China and Hong Kong, it would be a very big bang, but let's not get our hopes up too soon.